We're settling in pretty quiet. Let's welcome on board Devina Mehra and find out what is it that we should be focusing in on when it comes to the markets. Devina, hi, morning. Good to have you in the show. And Devina, in your own words, so much noise all around, right? Everything from GST, Trump tariffs, RBI policy, now the Fed meet. Do you really cut the noise? Do you do that at all? Because all of these events will have a bearing on the markets. What should an investor be doing?
Yeah, there's a cacophony of noise. I had just tweeted that yesterday that for the investor, there's just too much news. Of course, a lot of it is things which, as they say, this too shall pass in that category. But some things, of course, have a direct impact on corporate earnings, whether it is GST or Trump tariffs. So those you definitely have to incorporate. So in a sense, the tariff news has been negative internationally and positive in India, because that's the Trump tariff versus the GST. So that you have to see. And overall, of course, the macros have not been bad. They've, of course, nominal GDP growth has not been great. So corporate earnings, tax collections, fiscal, all that depends on the nominal growth. But overall, consumption has been picking up for about the last year from the absolute depths of 23, 24, when nobody looked at consumption because the market was still doing well. But consumption is picking up. Inflation has come down. I mean, there's been an uptick recently, but overall it has come down. Things like food and crude, the prices themselves are down, which is good news for at the revenue line, and which is good news at the margin line, because the crude prices are the benchmark for petrochemicals, which is the input for a great many industries. So overall, I think the news is positive. Trump tariffs, while not great for the economy and employment, on the listed space, the impact is limited. And of course, you know, there are now all these nice sounding sound bites saying things will get resolved. So let's see what comes out of that.
Well, indeed. Hi, Devina. Morning and good to be speaking with you. But Devina, you have been talking about the whole consumption theme picking up, and we see that you have the auto companies in your as a part of your portfolio. But post this big GST push, Devina, how are you playing the consumption theme? Any fresh additions, any pockets within consumption that is still looking attractive to you?
We are, yes. I mean, we've been overweight actually auto components from the beginning of 24, along with pharma and healthcare. So that we have been overweight for a long time. FMCG, we have added over 2025. So now FMCG also we are overweight. So that's where we're still positioned. Of course, I mean, it's also to some extent a stock specific call. So some FMCG name we actually got out of and got into others. But overall, we are overweight that space. And of course, GST will be a further boost. Of course, what will happen? You know, now my call earlier was that you will see all that consumption and inflation numbers that I spoke about. I thought you would see an uptick in earnings in the second quarter. That's a July to September quarter. Now, because of this GST change, which actually caused some postponement of buying, and also even after the change was announced, that there was a lot of uncertainty on what happens to the goods in the pipeline, with the distributor, with the dealer, with the retailer. So and now we are in the middle of September. So I think this quarter you may not see the earnings uptake you were I was expecting, at least, and that might get pushed to the third quarter. But that's a minor detail. I mean, in the sense that the overall, the move is positive.
Okay, so that's the take coming in on the consumption pack. Hi, Devina. Morning. This is Snehi joining in, and good to be speaking with you this morning. Devina, given the fact that all this noise that we've been talking about, most of it is positive for the economy in terms of our GDP, the GST push coming in, and the front loading by the RBI. But overall, the market is still stuck in a range, Devina. What could be the next trigger or the next fillip for the market to really take off above this 25,000 mark, and where would you be placing your bets?
The trigger or the narrative always follows what happens in the market. That's been my long-held belief, that for the exact same circumstances, you can come up with a theory why the market went up and why the market went down. COVID time being a very good example. Not only could you not have predicted the COVID and the fall, but if I had told you in 2020 beginning that something was going to happen, which will take actual revenues to zero for a whole range of industries from auto, aviation, retail, hotels, and really cripple a whole lot of others as well. Would you have ever predicted a bull run? Of course, in hindsight, there are all kinds of reasons found. There was liquidity injection, this, that, and the other. But the fact is that the reasons are always found in hindsight, and risk is always something that you did not expect. So those are the things to remember when you're talking about what would be the triggers on either the positive or the negative side. But overall, my advice would be to remain invested to the extent of your equity allocation. So that is still my advice. I was looking at my old podcasts in February when my book had just come out, and every one of them I'm saying that if you were waiting for a correction to invest, have you invested? And that at that time, the Nifty was in the 22,000 range. And so at least it's at 25,000 now.
Devina, appreciate that view. But also, Devina, you've been tracking metals and global commodities too. Give us your outlook on the move that we've seen in gold, in silver. Gold once again this morning at a fresh all-time high. How should one be allocating, or what percentage of the portfolio should be in commodities? What should be equity? And given that we're expecting a boost post the 22nd, post GST kicking in, how should the balance be in the portfolio right now?
So of course, I cannot give an asset allocation for every person watching this because their life circumstances are different, their goals are different. But gold and silver should be part. That's been always my belief that they should be part of your asset allocation, but they should not be something like 25% of your allocation or something. So you have to, and never chase the asset class that has done well off late. So systematically, if you chase whatever has done well off late, whether it's an asset class, whether it's an industry, whether it's a category like small caps, systematically you will underperform. So have an allocation, but not too high allocation. And one part in the asset allocation which is often missing for people is the overseas investments or global diversification. And US is not the globe. That also I would like to just tell your investors once again. I was looking at the euro. Euro ended last year at 88.5 rupees. In fact, a tad lower than that. It is now at almost 103.7. So that's a 15% move in this year itself so far. So those are the things which often become kind of blind spots when you are chasing whatever has done well of late. Silver, of course, has an industrial story also, especially with solar cells and all that. So unlike gold, it is not just a precious metal.
For the precious metals in silver sitting at a 14-year high for itself. But Devina, one of the other ideologies that you advocate is no theme lasts forever. And no one has a visibility beyond a couple of years, but it's a good start to do that. But Devina, in India, a lot of the experts do talk about the big EMS theme that is playing up, defense, power. These are some of the ideas where experts do have a long-term visibility. Just wanted to have your thoughts on the same, because some of the listed companies are also having a good run. How do you see the space and any likings within the same?
See, I see all these headlines of a big order from usually defense, power, railways or infrastructure for roads and all that. And people think it's an unmitigated positive and the stock should just run up. But if you talk to people who have been in the field of supplying to the government or semi-government like UP, state, like the state electricity boards and all that, they will tell you, and I have been a banker, I have been an equity analyst, that supplying to the government is always listed as a risk area. And that the reason for that is very simple. It's difficult to get money out of the government. And I was talking to somebody who has been in the defense space for decades and obviously this business. And I was asking him that, what do you think about getting the money out? And said, that's always the challenge. In most projects also, there are cost and time overruns which are very difficult again to get sanctioned. For example, this was the story of the Bandra Worli ceiling, which we now admire so much, but the company that was making it went into real trouble just because they were not getting money for the overrun. You are the lowest bidder, which means your margins are slim. Then there's also, when you make a project, the government will typically keep, even after the project is handed over, they will keep back some money to for 6 months, 1 year, supposedly, to make sure everything is running well. And it is, you have to sweat blood to get that money out. So those are the things when people just look at the headline order book, they do not realize that what is the return that's going to be made on that? Are you going to get the money? When will the cash flow come? I think sometimes too many people turn a blind eye to them, all these issues, till it comes and hits them on the head.
Devina, what is your sense on the entire financial pack? I see that it is one of the largest sectoral allocations in the portfolio right now, but we have seen a slowdown in Q1, and a lot of analysts and experts that we've interacted with, they're also flagging off that Q2 could be seeing a similar slowdown for financials as well. Any rejig at all in the portfolio?
So, I mean, while it is a high allocation, we are still underweight versus the benchmark, because in the benchmark, it's an even higher allocation. Yes, I mean, compared to, we are normally very underweight banks and lenders. Now we are less underweight. I mean, we have added some, mostly this year, because after it had been in an underperformance mode for a long, long time. In fact, if you look at the last 5 years, 2021, 22, 23, 24, barring 2022, every single year financials have underperformed, and underperformed mostly by a very wide margin. So this was just that we thought that underperformance period might come to an end. And as I said, we are still not overweight. We are that's why I did not mention it as an overweight sector. We are still underweight, but we are holding more than what we usually hold. If you ask me fundamentally, yes, I mean, there are many risk areas, especially given the household debt. If you compare the debt servicing to the income, and also how much the household debt is compared to what the savings rate is, all those indicators are not great. And so there are risks there for sure. Of course, if you look at the last quarter, the public sector banks have done surprisingly a whole lot better than the private sector banks. I don't know whether you saw that.
All right, Devina, with this, we let you go on that. So good having you on the channel today. Thank you so much for taking the time out and speaking with us.